So I'm Kim Arthur, president of Main Management. We're based in San Francisco, and we've been running portfolios exclusively with exchange-traded funds for 20 plus years now. So 2023 is interesting. This feels like it is the most predicted or anticipated recession ever. Everybody is calling for a recession. And what I like is Mr. Market usually likes to confound the largest number of people and cause the biggest amount of pain. So right now the pain trade is for a recession not to happen and the economy to continue rolling along. And with 3.4% unemployment, it kind of feels like that's what the market is missing. Yeah, international has been a real conundrum for almost all investors as an asset class for the last 12 years. What we've done with our work is there is one highly correlated factor to international equities outperforming, and that's called what's happening with the US dollar. So when the US dollar is rallying, like it has been here since 2000 and basically 11, so it's been over 10 years, we saw a peak, what we think, in the dollar at the end of September. So that is a major headwind when the dollar is rallying. Now that the dollar is rolling over, that becomes a tailwind, and that asset class can start to look pretty attractive. If you couple it with two other factors, valuation right now with international on an absolute basis is extremely cheap, and then relative to the US is extremely cheap. And then the last factor is the earnings growth right now for the emerging markets and the developed markets is significantly greater than the US. So it's got this trifecta that's set up for it. So we think it's an interesting one. Everyone's underweight the international asset class. If you mention the I word, people run. Yeah, volatility, obviously last year there was extreme volatility with the Fed raising rates aggressively. They took them up 450 basis points, which is, it's been decades since they did that. This year you're going to get a continued volatility, but it won't be as abrupt. But you will still have a lot of uncertainty over where the economy is going, where earnings are going. And what that really sets up, what makes it interesting, is if you have any strategies that can, quote, harvest that high uncertainty or volatility, that can be very interesting. So there's a lot of call writing strategies that Wall Street has out there. And we have one, it's buy W, B-U-Y-W, and we feel that that has a place. We like to say it sits between the wall and the wallpaper. The wall is fixed income, the wallpaper is equities, this slices right in between.